what's up? Red Panda Anthem. Red Panda, what's good?
So, all right. So, what does this mean for the average person? Should they not invest in crypto? Should they? What about exchange? I mean, we talked about before. You shouldn't really have your money on an exchange if you.
Yep.
Or should have your coins on an exchange. I
Yeah.
should say. So, what does this mean for the average person that is a crypto novice and just hearing about this?
You need to invest in the top two, Bitcoin and Ethereum. And I still don't love Ethereum, but if I had to pick two, those would be the two. I do need to issue an apology to Coinbase though. I still think that Coinbase is going to have some troubles, but when we were in Miami, I said they could probably go out of business. And the way that Brian has run that organization is nowhere near close to what Sam did. So I have to say that I was wrong in casting that aspersion on him. I still think that they're in trouble, but not in the same light. I want to be clear, like Coinbase is not anything close to FTX. But Bitcoin, Ethereum are the top two. But now this is going to lead to a lot more regulation, and the CFTC is going to get involved. NFA is going to get involved. The SEC is going to get involved. They're going to start calling a lot of these securities, and it's going to lead to a lot of trouble. A lot of these coins are going to get flagged, and 99% of them are going to be marked as worthless.
Yeah, it'll be flagged. Open your books, show us the books, and once those books get open,
game, set, match.
So what about okay. Anything else you want to say about this?
No, I think obviously our stance has always been the same, right? Like we don't believe that the space is going to be going. We obviously know the top two coins.
Mm-hmm.
Risk management is key here.
Was this a setup from Binance? Because it looks like, okay, so a report comes out and was published. Who knows where that report was given to the...
Oh, we know where it came from.
Then Binance publicly announced that they're selling their coins, which that was the whole thing that caused everything. It was a domino effect. So once that
many withdrawals too fast.
Yeah.
But Binance was the reason.
They caused a run on the bank.
So do you think that this all
ties in?
Somehow, I don't want to, say
I'll say it. Listen, be very key in who you choose to go to war with, because they may end up being the assassin that puts you out of business. Like Chamal said it this weekend. He said when Sam was trying to get them to invest in his business, they sent a 2-pager of recommendations of what to fix. They called him back and literally said, "Fuck off."
Who said fuck off?
Sam.
Told
Chamal Polyhapatia, who was like one of the best.
I never get his last name correct.
Yeah, I do my little research. So to say that, and so imagine we'll say it privately. So and Sam has some words for CZ at Binance. So if someone comes up to you and say, "Man, Rashad, F you and EYL," and then you say, "Okay, I'm gonna buy your company, send me your paperwork, update your paperwork, fam." They send it in and they're net negative while saying they're the real biggest. It may come out to Charlemagne that, hey, they're 15 million in the hole. We have to understand that business is war. I know people may play polite on social media, but business is war. Like we all have known people that have risked their lives and been willing to do certain things for 5, 10, 15,000, 50,000. We're talking about billions of dollars here. So yes, the report was put out, but what they really did was expose the fraud that was there all along.
Yeah. Yeah. That's what I said. I mean, that's why I prefaced it by saying, understand who your rivals are, understand who your competition is.
Yeah.
And I think he understood it, but it was too late. Right? Like in his tweet, he didn't directly say it, and I'm talking about Sam. He didn't directly say it, but it kind of affirmates it.
Why would you send your financials on a letter of intent?
Yeah.
And also, they had no board of directors, which is also a red flag. Like people were buying equity into the company and were getting no board seats. People only do that when they don't want you to see the books. Like it was a bunch of red flags. Like once you start to look into the paper, and these stories that happen and we have to curtail our human desire to want high returns with no work. Because if we stop getting sold these pipe dreams, there won't be as much room for them. Do your research, do your own due diligence.
Will Sam have a return?
Hell no.
It's done?
Wolf of Wall Street, crypto.
30 years old.
Over with. Y'all can clip this up immediately. Clipped right now. It's over with. And also, in every scam, you need a fall person. They knew what Bernard was doing. in his era, some people were aware of what Sam was doing. You got to be very careful here. They need a fall guy.
Yeah.
And he'll be that.
Well, we will monitor the situation.
It's over with for Sam.
We will monitor the situation. All right. So here we are with the legendary David Rubenstein. Thank you for joining us.
Yes.
If you're not familiar with David, he is the chair of the Board of Trustees of Duke University. He is the host of Bloomberg's Peer-to-Peer Conversations.
Yes.
And he is the co-founder and co-chairman of private equity firm, the Carlyle Group, which is a global private equity investment firm. How much assets under management?
400 billion. If that number has changed, please correct me. But 400 billion managed under management right now, which is
amazing.
Yes. So thank you for joining us. Appreciate it.
My pleasure. Thank you very much for having me.
And he's an author too. We'll talk about his book.
Yes. I'm looking forward to reading that book.
Yes.
Very important. So, all right. So let's get into it. I want to start off with, some education for the audience. Private equity. Can you explain what private equity is? I feel that people have a good understanding of venture capital because that's been in the news a lot and that's been very popular the last couple of years. But I think that the general public still doesn't have a good understanding, or they might not have ever even heard of private equity. So can you explain private equity, what you guys do?
Let me explain. In the United States, the phrase private equity means one thing. Outside the United States, it means another thing. In the United States, private equity more or less means all private investments. It could be venture capital, growth capital, distressed debt, anything where you're buying an asset that is something that's going to be held privately. It's not going to be public when you own it. And the theory behind private equity is that when you have something that's not in a public setting, you can make changes, you can improve it, you can incent people, you can pay them more, and ultimately you'll get a better return. So the theory behind private equity is that you buy an asset, you make it much better. When you sell it or you take it public, you're going to get a rate of return on your investment that's going to be, let's say, 20% per annum. So if you put your money in the bank, you're going to get maybe 1% a year. If you put your money in the stock market, maybe you get on average 6% a year. If you put your money in private equity, and it's a good private equity fund or deal, you might get 20% or 30% a year. Well, that's pretty good. So the theory is it's a better way to make add value to an organization, and you can get a good rate of return. So that's what it is. Basically, fixing up something in a private setting, making it better, and ultimately selling it after 3 to 5 years. That gets you a return of maybe 20% a year.
Thank you for being here. Huge fan of your show. Can you talk to us about the importance of being a contrarian in the face of conventional wisdom? And are there any sectors right now you think people should take a contrarian take on in this environment?
All right. The greatest investors in the world generally are contrarians. If you just went along with the average common sense view of what the average person thinks, you would be one of the pack and you wouldn't do anything that make you stand out. So contrarians take a view that's different than the average common sense wisdom. Today, for example, the common sense wisdom that the average investor would have is get out of the stock market, sell whatever you have. The economy's going to hell in a handbasket, and we're going to be in a recession. The smart investors would say, now's the time to come in, buy things at a discount, and eventually, and the recessions always end, and eventually in 3 or 4 years, you'll have bought something at 50 cents on a dollar, and in 2 or 3 years, it'll be worth $3, something like that. So that's when a contrarian goes against the conventional wisdom.
Well, our audience is filled with retail investors. We have some institutional investors, I'm sure, but a lot of retail investors. And obviously, they're learning the market, they're understanding it, they're investing in it. What are some habits that you've come across in your career that you've noticed that great and good investors have, right? Mm-hmm. So they can have an edge.
Well, people who are great investors, generally, this is their life. This is what they do full time. They don't kind of have a day job and then they're picking stocks at night and then they they do well. You have to do this full time. You have to be pretty smart, good with numbers. You have to have a willingness to read enormous amounts of material. You have to admit a mistake when you make it and get out of a bad deal because everybody makes a mistake. I think it also takes some humility to be a great investor because you realize you're going to make mistakes and you can't say, I'm so brilliant and the market's wrong, but I'm right and the market's wrong, and you start losing money. Those are things that make great investors. The average retail investor who buys stocks in the public market they're probably not great investors. They haven't done this for a living. You have to do something for a living. And, if you were going to a dentist, you wouldn't want a dentist who is spending full time picking stocks. You want a dentist who's going to actually know how to be a dentist. So an average dentist or doctor isn't doing this full time, and therefore they're probably not going to be that good at it. That's why for the average retail investor, the average person who's not a professional, they're probably best to go into index funds, which just mirror the market. Very modest fees, and the stock market goes up 13% a year, you're going to go up 13% a year. Trying to pick stocks and become Warren Buffett while you have a day job as a dentist or doctor is a fool's errand.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Whole point going up. I know they can't stand it.